Good afternoon, traders and investors. Will back here with another one, coming to you with a Tuesday market update. Hope everybody had a beautiful day. And in today's markets, guys, little bit of calm before tomorrow's storm, right? Today, most of your indexes were green across the board, and for the most part, very decent, healthy rotation across the board. The bulls are still in short-term control right now of most of your major indexes. So it'll be very curious to see tomorrow how the markets react to Jerome Powell's statements at 2 o'clock. Tomorrow is a very pivotal meeting, guys, and arguably this is the most important week of the entire year because we are going to get guidance as to how many rate cuts we're going to get for potentially the remainder of 2024 and how soon are those rate cuts going to come. So in today's video, guys, we are going to take a look at a beautiful article put together in terms of the expectations for tomorrow. So we're going to be going over that together, and then we're going to be tackling our technical analysis on major indexes, see how the markets are set up for tomorrow, and determine whether or not there are a few swing trades to be made in either or event, whether it's a positive event or a negative event. We're going to take a look at the levels and see what matters most. And then lastly, guys, we're going to cover our major tech names. And there as well, I will be laying out a few key levels that I will be looking at if we end up bullish or bearish after tomorrow's trading. So with all that being said, guys, let's get right into today's video. So SPY up 0.56%, QQQ up 0.25%, and QQQ with a very healthy day of recovery, if I do say so myself. We started the morning, guys, with a hefty gap down open. You can see here pretty much on the morning, we were down about 1% on the QQQ. So for the QQQs to end green on the day just shows that the bulls are still here and do still have a say in these markets. And even though, guys, that I've been relatively bearish in the short term, I've always focused on the fact over the past 2 weeks, I keep mentioning your long-term bulls in terms of their monthly charts and your weekly charts are all in bull control. So do not be surprised that it is relatively tough for the market to put in some negative swing days here recently. Your long-term bulls are still in control, and until they get derailed by a large macro event such as the one tomorrow, well, they will remain in that full control until the data changes. So that's why tomorrow is such a key day, guys, for short-term movements in this market. If it's a negative day, I've kept saying this, guys, for the past couple of weeks, if it is a negative day, we can be expecting maybe 2-3 weeks worth of sell-off, just a little bit of cooling down and repricing of assets to the downside as institutions adjust to new expectations for interest rates over the course of the year. And obviously, guys, well, if tomorrow is a no change from the Fed, if basically they disregard our hot inflation reports, well, the bulls are just going to take over and it's going to be business as usual. So let's take a look at our heat map here on the day. Our heat map shows that the market was fairly broad for the day here, guys. You can see really only outliers to the downside. A few semiconductor names led by AMD to the downside. AMD was actually down close to 7% on the day, recovering a bit of that, still ending just under 5% down. But for the most part, guys, you see fairly healthy rotation in big tech, even if Google and Meta had some slight drop-offs after yesterday's rallies. And then healthcare, financials performing very well, and all of your other major sectors really coming in and performing well on the day as well. In terms of your one-day relative performance here, you can see that the only two negative sectors on the day pretty much, basic materials and communication services led by Google and Meta to the downside. But for the most part, it was a fairly balanced market. The bulls doing a great job here of really recapturing a lot of the losses that were seen on Friday and both Monday, not only on QQQ, but also on SPY. SPY now back above your 12 EMA. So looking fairly decent heading into tomorrow's meeting, but we're not out of the woods, guys. We have not cleared any significant levels to the upside or to the downside. We're really right in the middle, so it really opens the door, guys. Tomorrow is going to be a very crucial, pivotal day to determine who will be in control for the next couple of weeks. Will we continue to see these daily breakups higher and really just reset daily uptrends into furtherance of weekly uptrends? Or if we start breaking down here, can that be viewed as daily downtrends into weekly consolidation? That's going to be very crucial to see tomorrow after tomorrow's data. Now, let's take a look at this article by Investors Business Daily, guys. This was a very well thought out article. They pretty much cover all the points that I've been reiterating on the channel now for the past 2 weeks. So let's just recap some expectations leading into tomorrow, shall we? So here's the title, the headline of the article, guys. This Fed rate cut surprise may fool everyone. The S&P 500 should be okay. So let's take a look at what exactly they're saying. The outlook for Federal Reserve rate cuts has divided Wall Street into two main camps. The no landing camp thinks the higher inflation readings to start the year, solid job growth, and a booming S&P 500 will keep the Fed on hold, meaning the economy and the stock market may be a little bit too bullish right now for them to cut rates. Now, the group forecasting for a soft or maybe slightly bumpy landing expects sufficient disinflation progress and emerging signs of a slowdown to allow the Fed to deliver 3 or more rate cuts this year. Just goes to show you guys the market right now is highly divided. Are we going to get a no landing scenario? Are we going to get a soft landing scenario? That really has Wall Street divided into these two camps. Now, here's the title of this first little paragraph here. The first Fed rate cut, why it's so important. Fed Chair Powell's January 31st news conference, so the last FOMC, end of January, seemed to hint at policymakers' discomfort with the rate cut outlook they offered in December, which was very bullish. 3/4 point rate cuts this year and 4 more in 2025 was the expectation. So 3 cuts this year, 4 in 2025. That's what we got the last time we got the summary of economic projections in December, aka the dot plot. Powell stressed that the initial rate cut carries more significance than an ordinary quarter-point move, calling it a highly consequential decision that the Fed wants to get right, and here's why. Powell didn't explain why that first cut matters so much, but the implication is that it could send an all-clear signal on inflation and amplify expectations that a series of cuts will follow. So once they start cutting, guys, the market will turn very bullish, and he does not want consumers to go back out and spend their money to get inflation back higher. That's what they want to avoid. This also may have been on Powell's mind. In the 11 rate cutting cycles since 1982, the S&P 500 has averaged nearly a double-digit gain in the 6 months following the first cut. That includes a 25% surge in the half year after the first rate cut in 1998. So once again, he knows that once you start cutting rates, guys, the tone of the market gets excessively bullish. And what do people do with all of these gains from their stocks? Well, they sell their stocks and they go out and buy other things, which contributes to inflation potentially coming back. So that's why they're so careful on the timing of when they want to do this first cut. Now, the Fed cut rate odds. Going into this week's Fed meeting, market pricing shows 57% odds of a quarter-point rate cut by the June 12 meeting. Further out, markets are pricing in a year-end Fed funds rate of 4.64%. That implies a strong likelihood, about 65%, of at least 3 quarter-point cuts from the Fed's current 5.25% to 5.5% range. So going into this meeting tomorrow, guys, the market is currently expecting 3 cuts. Anything that we get, any data that shows that we're going to get less than that tomorrow is going to be fairly negative for the market. If we come in line with 3 cuts or even above, obviously that's going to be bullish. Now, the soft landing camp may be underestimating the Fed's concern about easy financial conditions and its reluctance to add fuel to the AI stock boom. That's what we've been talking about, guys. They're really concerned. They do not want the market's already been ripping, right, for the past 4 months. They don't want to add to that even more by projecting extremely bullish rate cut odds. Now, what's changed since the December Fed meeting? By the January 31st meeting, some Fed policymakers were already getting nervous about 2 easy financial conditions. The risk that the wealth effect from a roaring bull market would boost consumer spending and stall inflation progress likely played a big part in Powell essentially taking a March rate cut off of the table. That's what we've been talking about, right? Subsequently, hot January inflation data released last month pretty much torpedoed chances of a Fed rate cut at even the May 1st meeting. Now we're all the way in June or July, right? Still, Powell told Congress in March that cutting interest rates will be appropriate when the Fed gains sufficient confidence, and he said we're not far from it, that inflation is on a path to get back to 2%. That's what we were talking about after Powell's conference about 2 weeks ago at this point. Now, after that conference, we got more hot inflation data. So, following the CPI and PPI data, which is roughly 1.5 weeks old at this point, Nomura economist Aichi Amemiya wrote that Fed policymakers may substantially revise up their projections of 2.4% core inflation for 2024. That could go hand in hand with a revised outlook for just 2 rate cuts this year. So once again, guys, it all depends tomorrow how much importance does the Federal Reserve put on the most recent hot inflation data reads that we've been getting in January and February? If they don't care about them, nothing will change in the SEP tomorrow, and the markets will just continue business as usual. But if the Fed does care about these most recent hotter than expected inflation reports, then they can revise their core inflation projections for 2024. And as a result, if they deem core inflation to be higher by the end of the year, they may taper back on rate cut expectations from 3 cuts down to 2 cuts, which would be negative for the markets. Still, the Fed probably isn't overly concerned about the uptick in inflation in January and February after 7 tame monthly readings that have seen the core inflation rate drop below 2% on a 6-month annualized basis. This is what we were also saying, guys, after the hotter than expected CPI and PPI numbers that it came in roughly about a week ago at this point. We were saying that even though the numbers came in hotter than expected, it still shows a general downtrend when we look at a 12 or trailing 6-month basis. So the data, even though is temporarily bad, it still shows an overall trend that most of your segments of inflation are coming down. So it just goes to show you guys how much of a balancing act the Federal Reserve needs to put on right now. It is not an easy task at hand. Now, we have a few last segments here. So an agile Fed. Jefferies economist Thomas Simons wrote in a March 13 note that his base case has the economy weakening enough for the Fed to cut 5 times this year starting in June. That's very bullish, guys. But if the economy continues to surprise to the upside, so strong GDP, strong jobs market, guys, right? He says the Fed likely won't cut at all. And this is true. If the economy keeps being good, jobs market keeps being good as well, Federal Reserve really has no need to cut and ease financial conditions. You know, they really don't want stocks to continue ripping higher at an exponential pace, and they don't want people spending their money, which contributes to inflation. So the Fed has a job to do of threading the needle, finding the perfect sweet spot, and that all starts with the timing and of that first rate cut, and then how fast will they keep cutting after that? 2 crucial pieces of information we're probably going to get tomorrow. Yet, with such a wide range of outcomes for the economy this year, there's a risk in the Fed moving too early. That's why the challenge for the Fed on Wednesday is to reset market expectations to keep investors and businesses from turning over exuberant at the first rate cut, right? Very important. Now, the S&P 500. So far, the S&P 500 has kept rising even as markets have gradually priced away expectations for the rate cuts currently in the period, right? So it's been true, right? The S&P 500, even though we're expecting some rate cuts here, it's just, even though the S&P 500 was pricing in as of the December meeting 4, 5, and 6 rate cuts for the year, and now we've consistently been tapering back those expectations from 5 to 4 to now 3, right? The markets have been pricing those in all while moving higher. The AI stock rally has powerful drivers beyond Fed rate cut hopes. While an implicit Fed tightening via fewer projected rate cuts may cool off the S&P 500 for a bit, it wouldn't be a game changer. And this last sentence here really sums up my thesis as well, guys. The reason that I'm temporarily bearish is exactly for that. It may just be an opportunity to cool off the markets after this 4-month rally before we resume the rally, most likely in later part of April into May. But it would not be a game changer, right? Nothing that the Fed is going to say tomorrow will completely undo the narrative that rates will be coming down this year. Once again, it's just in terms of the first rate cut timing and then the frequency of subsequent cuts, right? So if anything, guys, if tomorrow is negative, it'll really just be a temporary negative catalyst. As I keep reiterating on the channel, the rate cuts are definitely coming this year, whether, regardless of who likes it or not, they are coming this year. It's just now down to the timing of that first one and then the frequency of the ones thereafter. But your rate decrease cycle will be started in 2024. That is most likely certain, in my opinion. So So with that out of the way, guys, let's now get into our technical analysis of our major indexes, shall we? So SPY up nicely here today. We are still currently, guys, in a little bit of a daily downtrend. You can see higher highs have not been set by the market yet. We're really range bound. If you look at the whole grand scheme of the past 2-3 weeks of trading, just goes to show you how much emphasis has been put on this Fed meeting. As soon as we started getting those hotter than expected inflation reports, CPI and PPI, the market has really been struggling to make new highs. But on the flip side, guys, we really haven't fallen off a cliff. It just goes to show you the market has been pricing in the negativity fairly well so far. Now, the most uncertain event is tomorrow. After that, the market will have certainty. And that's why we're expecting here, guys, either a flush to the downside, continuation of daily downtrend at that point. Keep a very close eye. The key level for me is Friday's low. If tomorrow after Powell speaks, we break 508.34 to the downside, your daily downtrend continues, and then we look to the bulls to protect this trend line. But since it'll be a negative macro event, I do believe the bears will get follow through. And at that point, we will be looking for weekly consolidation. Keep in mind, anything above 491, just pretty much looking for a weekly higher low for further trend continuation. So even if we lose this trend line temporarily, guys, it will just be for very healthy weekly consolidation. And then we'll probably just start a new one that's going to run parallel to this channel, maybe something like this to the upside in the future from down here, if ever that's negative. So moral of the story, it will be a buying opportunity if it is a negative event. And if it's a positive event here, guys, well, we need to look at the upside break right here, about 518 to the upside. Break 518, it's an engulfing move. Bulls regain short-term control. And then we'll just be looking for a daily higher low using this whole level that we just broke to the upside as new support to just continue the rally to the upside. So keep a close watch on those two levels, guys. These levels, if they break one way or the next, are going to give the direction for the next 2 to 3 weeks, in my opinion. So it's very important that we watch these two levels. Now, moving on to QQQ. QQQ also not looking too bad here, guys. As I've been showing on the channel here, we lost the trend line last Friday pretty much. And ever since then, it's been a battle every single day, guys, in and around this trend line right here. The bulls were under it this morning. We've regained it towards the end of the day, but tomorrow is the game changer day, in my opinion here. You are still in a technical daily downtrend right now, so keep a close eye on that low once again from Friday. If we break that low, daily downtrend simply continues, and then after tomorrow, if tomorrow's negative, guys, we will get a clean trend line break. At this point, it is not so clean. The bulls are still protecting it, but I wouldn't call it a clean break of your trend right now. However, if we break Friday's low and close below this tomorrow, it will be a clean break. And at that point, weekly consolidation will be well underway. You will be targeting 423 as your first stop for those markets. It'll provide a very decent dip buying opportunity here, guys, even potentially for a monthly higher low. In my opinion, if we head into a bit more weekly consolidation here, the worst that it can possibly get, if it really gets into a little bit of short-term fear, guys, is back to your previous all-time highs. That's a range of about 410 down to about your $400 level on the QQQs. That would be an additional drop here, guys, of not that much, about 7%. I know 7% sounds like a big number, but when you put it over, let's say, 3 or 4 weeks, the market's probably going to look something like this, right? We're not really expecting this off a cliff. We're really expecting just some soft weekly consolidation here, looking for the monthly higher low into a furtherance of this beautiful monthly uptrend that the bulls are in full control of. So just keep that in mind here, guys. We're cautiously optimistic for the short-term future. So which means that we are potentially entertaining the idea that the markets can cool off, but they will be cooling off in the broader context of an overall multi-asset bull market as a whole. So just keep that in mind. Now, moving on to financials. Financials is an interest rate sensitive sector. So tomorrow, this one should move pretty big. Now, we are still in this rising wedge pattern right here, which traditionally is a bearish pattern. I say traditionally, guys, because it's not a 100% success rate pattern. Can we get breaks of ascending wedges to the upside? Of course we can. It's just traditionally a more bearish pattern. Usually about 65-70% of the time, these tend to break bearish. But when they don't, guys, Don't be surprised. As I said, it's not a 100% probability, but I do like the odds of this one nonetheless. If tomorrow's a negative day, it will be respecting this. Two little negative catalysts for financials right now, coming up into our all-time high area of resistance, which is all the way up to about 41.7 right now. And at the same time that we're in the overhead resistance area right now, we're at the top end of this ascending wedge, right? So if we get a breakdown, guys, the technicals really would support that, in my opinion. At that point, guys, we need to really focus once again on the low of Friday. It's going to be the same for pretty much everything, guys. Friday's low is going to be an absolute crucial area. Lose the Friday low tomorrow, you will set a daily downtrend on financials. Financials really have not had a daily downtrend, guys, pretty much since early January at this point. So it's been a while, and it will be notable to us. That being said, if we do lose this low right here at about 40.6, that will be daily downtrend underway and will be weekly consolidation. Now, look at how much space financials have for their weekly consolidation. Anything above 37 is just for a weekly higher low for further trend continuation. So if ever we're not able to get through this resistance area in this one clean shot, may just have to reload down here and then go for a second attempt. All in all, bulls in full control of everything. Monthly full control, right? Beautiful monthly uptrend. They're in full weekly control as well. Beautiful weekly uptrend, and still in daily control as well. So the bulls in full control on financials. The only thing that can derail them at this point is a negative event from the Fed tomorrow. Now let's move into healthcare here. So healthcare recovering nicely on the day here after the most recent sell-off days on Friday and Monday. So up 0.66%, but in the grand scheme of things, guys, the bulls have still lost the daily uptrend after losing this low right here, 145.43. We are right now potentially expecting a lower high into lower low. Now, if tomorrow's extremely bullish, we may just end up engulfing this entire move. Then the bulls have the opportunity of resetting the daily uptrend that they most recently lost. But if tomorrow is negative, well then, just expecting pretty much a lower high into lower low. We are below our moving averages right now, and we are still trying to defend these lows right here. So it's dicey, right? Your bears are trying to gain more and more ground, but overall, your bulls are in full control of this market. Nice little monthly uptrend right here, a beautiful weekly uptrend with some nice sideways weekly consolidation, right? So your bulls are in control of the longer term timeframes. Key levels, once again, guys, going to be pretty much Friday and Monday's low. If we lose these lows right here, daily downtrend, clear loss of this 12 EMA at that point, even though we've been trading under it now for about 3 days. If we start really breaking down, guys, then the trend line, the moving average is officially lost, and your healthcare stocks will take a little bit of a dip. If we get a little bit more of a dip, just healthy weekly consolidation, and I will be targeting previous all-time highs, talking about the 142 area, leading into just further weekly consolidation would be a very healthy dip for this sector, in my opinion. This sector has really been outperforming most of everything over the course of the year, except for semiconductors, of course. Now moving into IWM Russell, getting a little bit of love today here, guys, 0.42% to the upside. Nice to see them recover a little bit. However, we are still in the context of this daily downtrend right here. So we will be looking, guys, can the bulls protect this overhead resistance area that is now support? Need to see them protect that, right? Highly interest rate sensitive sector as well. So this one will be probably moving a lot on tomorrow's data release. Now, that being said, the bulls have a decent range of support beneath them right now. This whole area we've been struggling, right? So it is up to them to protect this range with their lives. Currently, since we are in the scope of a daily downtrend right now, it is just healthy weekly consolidation. And you can see it's now been about 2.5 weeks of weekly consolidation. We're defending this 12 EMA pretty well right now. If it comes down to it, guys, we do have a lot of space, anything above 187.50 pretty much, just looking for a weekly higher low for further trend continuation. So keep a close eye on the Russell. If it is a negative day here tomorrow into the rest of the week, we need to see them protect this lower bound of my sweet spot, this red box here. Need to see them stay above 195. If they break 195, guys, it may just line up for a little bit of a tightening range if ever the data is too negative. May take a couple of weeks to really get through that data, get through that negativity before we can have more upside. Now, lastly, the Dow Jones Dow Jones not looking too bad at all today, right? 0.83% to the upside, looking fairly decent. Now, in terms of your control, who is in control? Well, that would be your bulls right now, still in a nice daily uptrend. Looks a bit sideways in relation to the last month of trading, but we are in a true daily uptrend at this point. So tomorrow we're looking for two things. Either a break of your all-time highs, which would just reiterate the fact that the daily uptrend is strong and your monthly and weekly bulls just retain control at this point. But if we lose Friday's low to the downside, 38,641, it will be daily downtrend started. At that point, it would probably be a heavy loss of the 12 EMA. You can see we really haven't lost this 12 EMA by much more than about 0.10, 0.2% over the last 4 months of trading. So if we get a fairly negative day on the Dow Jones here tomorrow and really break below these moving averages, that will most likely be for further extended weekly consolidation. It's a good thing that the Dow Jones has tons of space here, guys. Anything above, let's call it 37,100, is just looking for a weekly higher low for further trend continuation later on in the year. One thing I would be wary of, your momentum is looking fairly weak at this point, right? Dow Jones not really able to put in some higher highs with good momentum recently, which is why you see the MACD on the weekly slightly curling over. And we can see the slight same for a lot of different sectors. Financials, it's looking a little bit weaker, right? XLV looking a little bit weaker in relation to this prior move right here. And even something like the QQQs, your MACD is starting to want to roll over as well. So if tomorrow ends up negative, guys, those indicators for momentum will all curl to the downside, which is why I do believe that it will then lead to about 2, 3, maybe even 4 weeks of further downside. It's going to be choppy downside. I'm not saying, minus 1-2% days on SPY and QQQ every single day for 3-4 weeks. No, it'll just be a slight daily downtrend here with a little bit of choppiness. So with all those indexes out of the way here, guys, let us now look at a tiny little bit of crypto because that will be heavily impacted by the decision made tomorrow as well. So Bitcoin now putting in a little bit of a daily downtrend currently, as you can see. So what we're looking out for here on Bitcoin is, since this daily downtrend is underway, weekly consolidation is underway. Where's the weekly higher low, guys? All the way down here at about 39,000, right? So now at this point, just expecting a little bit of weekly pullback. If we do pull back here, guys, target your 12 EMA. That could be a likely area if things really get bad for risk on assets here in the next couple of weeks. I'm targeting weekly pullbacks all the way to about 55,000, which is our 12 EMA. And then obviously you have a big area, which is now going to be a demand zone between 50 and about 45. Now, I don't believe it's going to get that low, but 55 for a little bit of a tickle, a little bit of a touch, I would definitely be able to see that on Bitcoin. So as long as your short-term bears are in control, we are just looking for healthy weekly consolidation. And if it lasts more than this week as well, that will be very healthy monthly consolidation, potentially into the month of April, into the halving event before another round of rallies for crypto. Moving on to Ethereum. Ethereum showing the same signs pretty much. Daily downtrend currently, another negative day for crypto as a whole. Traders really taking some of that risk off the table, most likely leading into the Fed meeting. Can't blame them. It's been a phenomenal rally here over the past 4 or 5 months at this point. But tomorrow is a significant macro decision, right? For anything that's interest rate sensitive in terms of either stocks or assets as a whole. And crypto is obviously interest rate sensitive, right? When interest rates stay higher for longer, people don't necessarily have the ability to fully leverage themselves in crypto, borrow money, and then trade with it, right? So that affects retail, but it also affects institutions in terms of the amount of margin that they're willing to take on, the amount of risk that they're willing to take on as well. And you can see a little bit of pricing to the downside showing right now. So daily downtrend on Ethereum, which means weekly consolidation is well underway, but we already knew that. I'd be targeting this 12 EMA right here, right at about $3,000 for some further weekly consolidation. And after that, guys, your level really becomes, let's call it between 25 and 2200, this area right here, which is also synonymous. This was the support zone. It was resistance back here, and then the market blasted through it, right? So 2500 at the worst case scenario. I'm not really expecting it to go all the way down there, at least not in one clean shot. But if it wants to two-step this and have a little bit of monthly consolidation into the month of April as well, potentially open up some buying opportunities down here for the Bitcoin halving event, I would not be opposed to adding some Ethereum, anything with a 2000 handle in front of it. More specifically, guys, I'm looking for 27 down to about $2,500 for my next buy-in on crypto. So as a whole, guys, risk on assets selling off here in the past week in terms of crypto at least. So we'll remain to be seeing how they will be affected by tomorrow's event. Now moving on to our big tech names. Give me a quick second. And let's get it underway. So Apple here, 1.36% to the upside, really still benefiting from that positive news with that potential partnership with Google's AI, the news that came out yesterday that we showed on the channel. So still looking good. Apple is now in a nice daily uptrend right here. What will we be looking for, is for the Apple bulls to continue this daily uptrend at least to weekly levels that make sense here, guys. If you want to see a weekly trend reversal now that your daily trend reversal is underway, well, I need to see this daily trend right here get as high as potentially this level right here on the weekly, okay? So that's going to be roughly between 182 and 185. If we can put in a daily uptrend all the way through 182 to 185 before rolling over, it gives the bulls the best chance on the weekly to create enough space to set the weekly high or low and then potentially set a new weekly uptrend, because Apple's been trapped in a weekly downtrend now since pretty much the end of December at this point, right? So those are the things we're looking out for on Apple here. Key levels leading into tomorrow is once again our prior lows all the way down here at 169. And levels to the upside, if ever it's a very bullish event, well, you can see, guys, this 180 level, right? Big previous support level. So I'm expecting that to act as our first line of overhead resistance as well. So those are the two levels to the up, to the downside. One thing's for sure, if Apple drops tomorrow down into the low 170s, I will be very tempted to play the 170s or the 167.5s for either this Friday or next Friday, depending on the premiums. Now moving on to AMD. AMD, not looking too good here today, guys, but coming into our big area of support that we've been talking about. So this was a month-and-a-half long range from AMD, which was roughly between the 160 and roughly 180 level, right? Very wide range. And that was your previous weekly consolidation. So now we are once again in a phase of weekly consolidation and expecting this whole chop zone prior, right, to be acting as support. That being said, we are currently still in a daily downtrend on AMD right now, so any bounce could be expected into a lower high, into lower low, now that we're back within the context of this range right here, right? So as long as we're still in a daily downtrend, weekly consolidation simply continues. Now, we are reacting nicely from our weekly 12 EMA, roughly around the 175 zone, and I do believe the bottom end of this range, guys, will be very tough for the bears to break. 165 all the way down to about 158. Previous all-time highs, and was support for about 4 or 5 weeks there starting off in the year. So that's going to be a crucial areas for the bulls to protect. They have a big defense zone set up there, and I don't believe it's going to be easy for the bulls to break, for the bears to break, excuse me. That being said, we are going to be looking for this high tomorrow, guys, 194. If we can get back above 194, you can see an engulfing move happen. Then we're looking for the retest here, higher low, and then higher high, new daily uptrend. This area right here, right, where we come up, engulf, down, I would be looking for some swing trades here, potentially putting some contracts here in the mid 170 range off of this higher low dip. So that's the trade that I'm looking for on AMD personally. Keep a close eye on those two levels tomorrow, guys. 194 to the upside. And if for ever which reason we really sell off, I would like to see the bulls at least hold the 170 by this Friday. Give themselves really a chance, guys, to make this move down into the lows a bit more smooth. If we come down here with too much momentum, it could get a little bit ugly in my opinion. Take a look at how this monthly candle is forming right now. I know there's still about 8-9 days left in the month at this point, but still never like to see a monthly candle shaping up like this. It just screams monthly potential consolidation, right? So just keep an eye on that for AMD. Now moving on to Amazon. Amazon not doing too bad today at all, guys. 0.81% to the upside. Still consolidating sideways, right? Still can't break above our $178 of resistance. So the analysis on Amazon has been the exact same pretty much over the past 3 weeks at this point. Still struggling, guys. Sideways range at the top at this point. Levels to the upside and to the downside. Obviously, 178 is a big one. So if tomorrow's a big positive catalyst for the markets, I am expecting Amazon to potentially rally and finally crack this 178 level with a nice daily uptrend, which would really send the weekly uptrend onto a further leg. At that point, if we do crack that, your next target is about 188. So the bulls are coiling. They're trying to protect this higher area as best as they can leading into tomorrow's event. Now, that being said, if ever which reason it's a negative event, keep an eye on 172. If you lose 172, guys, you pretty much end up in a daily downtrend at that point, and then Amazon will look to further consolidate on the weekly with pretty much levels coming up 166 on the weekly for your weekly higher low, and The next stop would be 160. One thing is for sure, if we do sell off potentially, I will be looking for the midpoint between 166 and 160 to be making some plays. So those are the levels to be watching out for on Amazon. Amazon stock looking extremely good on the higher time frames here, guys. Monthly bulls in full control, weekly bulls in full control as well, and your daily bulls still not really losing much of everything, so I would deem them to still be in full control as well. Now moving on to Google. Google pulling back a little bit today after yesterday's news. So 0.38% to the downside, but still looking very, very healthy on Google, if I do say so myself here, guys. Just looking for any pullback now to be a higher low, anything above 141, looking for the higher low for further trend continuation, right? So I will be focusing tomorrow on two key levels. If it's a negative day, we're going to be keeping a watch on the gap fill, right, from pretty much the Friday session. So we need to be looking at 144. And then our prior level below that, guys, is going to be around 142, 141. Your moving averages are down there. And then we also have this huge prior area, resistance, support, this area between these two yellow lines. That's been the case, guys, for the past pretty much 6 months at this point, right? 141 to 138 is your most solid level across all of this trading pretty much. So that is the level to the downside that I will be looking at to hold up tomorrow. Now, that being said here, guys, I don't expect Google tomorrow to necessarily drop all the way down there. I'm just giving the projections here for potentially the next couple of weeks, right? If tomorrow's data is bad and we maybe revert into a daily downtrend, it'll just be very healthy weekly consolidation for Google after a monster last 3-week rally here. The bulls have now created a ton of space here to set the weekly higher low down the road if it's negative tomorrow, right? For the weekly trend shift. One thing's for sure, if we revisit these lower $140 range, I will be heavily swing trading Google. Now moving on to Meta. Meta not looking bad at all, guys. Really still stuck around this line. 488 to 490 roughly. It's such a magnet for this stock. Look, previous resistance after earnings and has been support ever since. Your 12 EMA is kind of glued into this area as well. So Meta is another case of a stock that tomorrow, depending on how the data swings, it's going to break one or two ways. If we break Friday's low, well, the Meta daily downtrend simply continues at that point, and we'll be heading into weekly consolidation, at which point we'll be heavily looking out for in the next coming weeks 455. It is your confluence of your 12 EMA, and it is the weekly higher low as well. So that is the first line in the sand level. Now, in terms of upside, guys, obviously this being somewhat of a tightening range right now, we want to be breaking 501 to the upside. Break 501 to the upside, your bulls regain a short-term daily uptrend, and your weekly consolidation at that point would most likely be finished, resulting in a new higher low, 477. Then we'll just be on for another week of bullishness for Meta. So Meta looking fairly good leading into tomorrow, guys. Your daily bulls haven't really lost the levels. Your weekly bulls also shaped up well, and your monthly bulls in full control. Now moving on to Microsoft. Microsoft up almost 1% on the day. They're having a nice day as well, and Microsoft doing one of the two scenarios that we listed yesterday in yesterday's video, right? So we were looking, this was a beautiful daily uptrend in the context of a big range that Microsoft's been stuck in for the past 2 months. Now, what happened recently, guys, is Microsoft was able to pop above this range, and then we were looking for the bulls to come down, use the top end of this range right here as support, use your moving averages as support to potentially get some lift and continuation above this range to really start breaking out on this weekly time frame. Now, tomorrow can really send this chart either ways as well. If it's a negative day, we may just end up breaking yesterday's low to the downside. It would be daily downtrend. And at that point, we'd just be coming back and being stuck in this range, right? Going to be looking for the bottom end of this range to act as support after that point. If that happens, we'll tackle it when we get there. But Microsoft still with a decent cushion of room to drop here before the most recent support level. And this being a big chop zone, it's not going to be easy for the bears to really flush this in one clean shot, right? So that's what I'm looking out for on Microsoft. Either going to get one or two scenarios. Either we're going to get stuck back in this range here for the next couple of weeks, in my opinion, because breaking it to the downside is going to be relatively tough. Or to the upside, guys, we're just going to continue on this daily uptrend breakout pattern right here. And we're going to set new weekly highs and new weekly all-time highs as well. At that point, your resistance level will be set 450 psychological, next area to the upside for Microsoft. Now moving on to Netflix. Netflix 0.38% to the upside. Not a bad day for Netflix per se, right? Still grinding higher, but still Netflix, guys, over the past 2 weeks of trading, they haven't really done much, right? They've kind of been stuck between 600 and 621, which is roughly about a 3% range at that point, right? So still stuck, guys. Tomorrow's data is going to be absolutely crucial for Netflix as well. Netflix is currently battling, guys, with this last area of resistance, which is about 620, because the next one is the all-time high. So I really do think that Netflix bulls are waiting for that confirmation from the Federal Reserve to start really pushing this price up aggressively. But if ever, guys, we get some negative data tomorrow, well, targets to the downside at this point, even though we're in the context of a nice daily uptrend, if you get some negative follow through tomorrow, I will be looking out for the daily downtrend into potential weekly consolidation. At that point, anything above 550 just going to be a very healthy weekly higher low. And the bulls have a lot of space here, guys. And we also have a big level that we broke through 575, right? The top end of this big range from 2020 and 2021. That will be acting as some key support. And we also have the confluence of the weekly 12 EMA right here too. So first line of defense is going to be 575. And the last line of defense right down here, 550. The bulls, tons of space here, guys, to pull back on the weekly, right? We can pull back 11% before losing the weekly uptrend. So they do have some room to give back. Now moving on to NVIDIA. NVIDIA actually was having a fairly red start to the morning here, guys. So take a look at NVIDIA, right? NVIDIA, as of the morning, actually down at one point almost 4%. But then throughout the day, guys, NVIDIA doing what NVIDIA does best, just really reacting bullishly to anything that gets thrown at it. Any dip is a buying opportunity for other investors, as we pretty much saw today as well. So NVIDIA is still in a bit of a tightening range. We did have some significant sell-offs, though, in some counterparts to NVIDIA's business. SMCI now with a heavy daily downtrend. You even have ARM stock coming down a little bit after their lockup expiry has just expired over the past week, right? The news on SMCI was that because of how well their stock price has appreciated, well, they want to issue more shares to the tune of roughly $2 billion in shares. So that's going to be a little bit of dilution for SMCI, but I think it's a good thing for their business to be doing such a to be raising capital in the most bullish period for the company. It's a really good thing. Obviously, it hurts shareholders in the short term, but for the company itself, it allows them to really raise some well-deserved capital, in my opinion, and just continue investing into growing their operations. So that was the negative news on SMCI. As a whole, though, guys, semiconductors did hold up fairly well, other than those two names specifically. NVIDIA, much the same, still a little bit of a tightening range here, guys. And tomorrow's data is going to be crucial because now we have pretty much a double bottom down here at 850. If we break 850 to the downside, guys, it is daily downtrend for the first time on NVIDIA since pretty much December at this point. So crucial level, guys, 850 to the downside. Keep an eye on it. Lose that. Daily downtrend has started. Weekly consolidation is underway. And at that point, guys, my target for weekly consolidation is down here at about $750. That's where I'll be heavily looking to play NVIDIA for the continued bullishness through 2024 and even 2025. That is where I'm looking to pick up some shares. So keep an eye on that tomorrow. And obviously, guys, if tomorrow's bullish, we need a break of 924. Break of 924 would put your bulls back in the driver's seat of the daily uptrend right here. And that would be the end of not much weekly consolidation at all, right? It would pretty much be a little bit of sideways here and then moving back higher. So looking decent on NVIDIA, if I do say so myself. Moving on to Tesla. Tesla was actually down today about 1.43%. So what we're still looking out here, guys, is have the bulls bounced enough to reset into a new daily uptrend, right? As of now, the answer is unfortunately no. So the bulls have only bounced. Actually, you know what? 618, it's not, it's not too bad at all. Actually, they have. Let me just retract that statement real quick. So the bulls have put in a significant bounce here, 61% of the move down they've taken back, right? So daily downtrend, look for the size of the bounce. If the bulls can recapture a little bit more on this bounce, it really sets them up nicely to set the daily higher low into maybe a new daily uptrend. And then we could finally potentially get a weekly bounce on Tesla after getting crushed pretty much for the last 2 weeks. Keep in mind, we are still battling it out, guys, at support right now. 180 to 170, such a big area of support. You can see how tough it is really for the bears to flush this. Lower than that, 153 is your last stop, but the bulls putting up an aggressive fight. This horizontal line and your downtrending channel line, that's the confluence area we're in right now. And you can see the bears are having a tough time cracking that, even with all the negative sentiment around Tesla. So if you're a Tesla bull, what you want to see is the the bulls really holding this double bottom right here, 160, and then setting up for a new daily uptrend. And then after we get the daily uptrend, we'll measure the size of the weekly bounce. You saw the weekly bounce right here was relatively weak compared to this, which is why when we rolled over, the lower low was inevitable. This time around, if we can bounce heftily, maybe up until the 190 zone, it sets up the bulls nicely to potentially have the chance at a higher low and higher high. Keep in mind though, Tesla is an interest rate sensitive stock. It will move a lot tomorrow. So the lows at 160 will be absolutely crucial at this point, guys. 160 to save the lower low at this point. And to the upside, if you want to get a best chance for a daily uptrend, the bulls tomorrow would need to engulf 182.67. If that happens, then we have some very good chances, guys, at reversing our daily downtrend into a daily uptrend and start recapturing a little bit of this weekly move. Keep in mind, Tesla also has deliveries numbers that are being posted on Monday, April 1st. So not next Monday, the Monday after that. Now, moving on to Palantir. Palantir actually performing 0.83% to the downside here today. So red day, but green candle. They were actually down significantly more here today. You can see this nasty gap down open from yesterday's trading rate, down about 4.3%. And just like NVIDIA, able to recapture a large portion of it, only ending down under 1% here. So what are we looking out for here on Palantir? The exact same thing here, guys, right? So we have a daily downtrend underway right now, which means that weekly consolidation is started. So now we need to look at the weekly higher lows, which are sitting right down here at about 22.28 is your weekly higher low. Now, we do have a very beautiful area of support below us, which is about 21.50 all the way down to about $19. This is a very strong area. Previous support during 2020 and 2021, and your previous 52-week highs on Palantir as of last year, right? Which were acting as resistance. So this area, in my opinion, even if we get a negative day from the Fed, guys, the bulls should be able to at least hold this area. That being said, the bears are in short-term control right now, so we are looking for us to protect these weekly levels right here. That's going to be absolutely crucial. And if you want the bulls to regain control, I need to see a pop above 25.50, get me a break above 25.50, and then we can potentially look at the bulls creating enough space to reset into a daily trend higher. At that point, I would be highly interested, if we get a play like this, making a little bit of a swing trade right here on Palantir, as we potentially are going to mount all the way up into the $28 level. So not looking too bad on Palantir. I like the fact that we're closer to the lower range here into tomorrow. If we do get a breakdown in this lower section here tomorrow, it's going to be a very juicy buying opportunity, especially with the volatility, to go shopping for Palantir in the next couple of weeks at these lower levels. So keep that in mind. And now lastly, PayPal. PayPal looking, kind of dicey here today, 1.9% to the downside, just basically giving up yesterday's gains as a whole, right? So PayPal, once again, interest rate sensitive play. So tomorrow going to be crucial for this stock. Daily uptrend is beautiful right now. We are still above our downtrending channel line, right? The last 2 years of trading pretty much at this point. Above it nicely right now. What we need to do to hold this, guys, if we do get a pullback into tomorrow, looking to set the daily higher low, look at this. You have your moving averages right here, $61.50 and $60. And you also have previous horizontal support right here, right? This whole nasty section right here, about the same, right? $61 on that average. So you have horizontal support and your moving average support coming in there as well. So all of the bullish factors are lining up for this stock to have a technical breakout up to about 75. The one thing standing in their way is tomorrow's meeting. If tomorrow's meeting is negative, guys, need to see them hold up $61 by the end of the week. At that point, we will reassess, but at least we are in the context of a nice daily uptrend. We're in the context as well of a new weekly uptrend too. So at this point, PayPal does have a lot of room, even on the higher timeframes, to give back into some, maybe if tomorrow's data is negative and we sell off for a couple of weeks, right? PayPal can afford to come down into the lower $61, $60 and still be in an overall bullish move, right? So that's what I'm gonna be looking out for PayPal tomorrow. Those few levels are key. And then if tomorrow is bullish, of course, here, guys, well, we may just retest these lows, 62 and the $62 range, and then just maybe do for another move higher. Like I said, upside target on PayPal at this point for this breakout is about $75. So hopefully all of that was helpful, guys, to help you prepare for tomorrow's levels, depending if you're going shopping for some indexes or going shopping for some big tech names, guys. I think tomorrow is really going to open the door for us for a lot of big levels, and is really going to provide a lot of clarity to determine how can we trade around the data after the data is released, right? If the data is bullish, then obviously, guys, we can readjust and we can be confident that the Fed has our backs, and we can be more confident in buying some of these dips and pretty much taking for granted that the market probably won't have a 7 to 10% correction as some people have been forecasting. However, if the data is negative, then potentially we are due for that 5, 7, 10% correction. And that's when we really need to be diligent on holding our capital as best as we can, letting the markets come to us over the next couple of weeks while assets get priced to the downside. And that's when we strike for the long-term bull run that we know is happening in the later part of the year, especially through next year as well, during that rate decline cycle, right? During the interest rate cutting cycle. So that's what I'm looking out for, guys. In summary, if tomorrow opens up a window of dips for the following coming weeks, it is probably going to be one of the last juicy buying opportunities for the entire year, because in my opinion, when you're going to look at the markets at the end of June or July, and then again at the end of December, the markets are going to be significantly higher than where they are now, not only on the indexes, but most likely across most of your big tech names as well. So keep that in mind, guys. I wish you all the best in tomorrow's trading. If you are trading with options or something like that, please be extremely careful. It could be an extremely volatile way in either or direction. So just make sure that you're trading with capital that you can afford to lose. It just makes managing those positions a lot more easy, guys. Please don't over leverage. And that is the only financial advice that I can pretty much give on the channel, is to tell you guys, just be careful with your trades, know your risk management, know your risk appetite levels as well. Some people can risk more than others without feeling, emotionally distraught. So just keep that in mind. It's a very big day tomorrow, guys. It's pretty much giving the guidance for the entire year, right? It's going to be the biggest Fed meeting this entire year by far. Dare I say, even more important than the actual first cut Fed meeting that may come in June or July, just because this one will alleviate a lot of uncertainty that's currently on the table. And whenever we get a lot of uncertainty that gets priced out on one given event, it's usually a very volatile day. And then thereafter, the few weeks is usually volatile as well. So tomorrow at least will clear up some uncertainty, but whether that's, whether that gives us more certainty of negativity or more certainty of positivity remains to be seen. So take care, guys. I'll see you tomorrow. If you enjoyed this video, consider dropping a like, would really appreciate it. Also, consider subscribing to the channel if you're new. So close to 1,000 subscribers, guys. I love you all, each and every one of you, for subscribing so far. Let's continue that growth together. And as usual, guys, if you have any questions whatsoever, feel free to leave me a beautiful question down below in the comments, and I usually answer you within the next 24 hours. So take care, guys. Have a great day. I'll see you tomorrow after the close, and peace.